Just broadly, in the last week or so, we've seen an escalation, pretty dramatic, in the trade war, higher tariff rates from both the U.S. and China. Generally, what does that do to the prospects for emerging markets?
It's not good for emerging markets, at least in the short term, because there's a lot of adjustments to be made, and particularly in Asia, because you must remember that most of the Asian nations have their major trade partner is China. So this creates some problems. But as you just heard, there are some countries that will benefit from the movement of manufacturing from China into these other countries. So we have to balance out and look very carefully at who's going to benefit and who's going to be hurt. But generally speaking, it's not been good for the emerging markets.
Yeah, we were just talking to the Hasbro CEO about that. So in your view, Mark, who are the biggest beneficiaries, and is that already reflected in their markets?
Not yet. Most of these markets are down. I would say almost all emerging markets are down. But I think gradually, as people wake up to the fact that these adjustments are being made, then we're going to see some recovery. So it's going to be a real pick market. In other words, we have to pick very, very carefully who we're going to be in bed with in terms of the future, particularly with this ongoing trade war, which is not going to end very soon. I think it's going to keep on going on.
All right, so what, Mark, then markets are the ones, at least you believe, are going to weather this storm better than others?
Well, I think in Asia, probably Indonesia and Thailand, Malaysia, those countries are going to be in pretty good shape. As we move up north, then you've got all kinds of problems. I'm here in Seoul, Korea, and as you know, there's this dispute with Japan, and this is going to hurt the Korean market to a great extent. So I would say those countries in Asia. Then further afield, probably after this Amazon fire problem is solved, then Brazil will be interesting. And in Eastern Europe, or at least the Middle East, you're talking about Egypt and Turkey. Those countries would be interesting.
On China, Mark, a lot of people are watching the Chinese currency. It's at the weakest levels in over a decade. How do you read into what China is doing strategically to manage that currency? Is it trying to weaken it? Is it trying to strengthen it? And what do these levels tell you?
I think they want to weaken it gradually. They, of course, want to keep control and not have it precipitous drop. But generally speaking, you're going to see a weaker renminbi. And, of course, the problem they face is as they reduce the amount of dollar holdings, then it will become much more difficult to keep this control. So it's something to watch very, very carefully. But I would say that renminbi is going to continue to weaken.
Do you think that Hong Kong dollar is going to continue to be stable amid the protests that have now been going on for months? And really a lot of investors have been on the other side of that bet.
That's for sure. I think the Hong Kong authority has enough reserves to protect the peg. But that can't last forever, so we have to watch it carefully. But I think they're safe for the time being, at least.
Mark, I know one of your larger holdings is Yum China. The Chinese seem to be staying away from sort of trying to foment nationalism or encourage boycotts. Are you confident we never get to that point?
No, I'm not confident. Here in Korea, for example, people are not going to Japanese restaurants. So these things do affect what happens in the marketplace. But I think in China, Yum has moved into some of the Chinese foods. They're acquired some companies that are in traditional foods, Chinese foods. So they won't be necessarily identified as an American company. But it remains to be seen. We have to watch that carefully.
Have you been increasing or decreasing or just keeping stable your positioning in China as a result of the weakening of its economy and the targeted tariffs from the Trump administration?
We're keeping it stable. We didn't have a big weighting in China. India was more important for us, and China is going to remain the same. We're not going to reduce or increase.
And Mark, finally, you got a new book. We mentioned it. You're dealing here with ESG, which has, we're hearing more and more about it as investors really do start to focus on it and their LPs start to have them focus on it or their investor base. You saw what the Business Roundtable did. I mean, is it here to stay, or is it, as some would tell you, just another fad that eventually will pass?
No, definitely it's here to stay, simply because good ESG means better profits, better earnings, and better performance. That's the bottom line. So at the end of the day, it reduces risk. If a company has a good ESG rating, it reduces risk and the stock price performs better. That's the findings that we've seen for a number of studies. And of course, our emphasis is on governance. We want to improve the governance of these companies, because then they can go after the environmental and the social aspects. But it's governance that's the key.
Where in the world do you see the best example of that?
But not many places are perfect. There's no question about it. I would say that in some countries in Eastern Europe, it's getting better. Places like Poland, we're seeing big improvements in Romania, mainly because of the Fondo Proprietatea Fund. It's done a lot of work in that direction. But I can't say that any country is perfect, and there's really a lot of work to be done. There's no question about that.